Okay, so we left off last week after completing rounds 1 and 2. So this week I asked you to complete rounds 3 and 4. So I figured I'd start off this week by going into the demo, and I'm going to start with round 3. So I'll complete round 3 and 4 and show you how I would complete the simulation. First thing I do is go over and check out my assessments and read these over and see how I scored in the previous year. I'd review my chart, specifically my performance chart, and I would see how did I do, as most specifically in my sales versus potential. So I want to see, did I meet the demand? So I created more demand than I sold cars for. So, oops, that's a problem. I need to fix that. Okay. Oops, that's our too many screens open. Let me close a few of these. All right, so now I'd go into industry. I'd look at my competitors. So this is, I'm the first company. How did the other companies build the car? What were their demand and forecast? What were their points? What were their ratios? So I'd do a thorough review of my competitors and see where I'm excelling and where I'm falling behind. And then I go back to my sales page. So the first thing I would do is I'd go to the student user manual, and I would look for review the forecasting area. And I see that, I'm in year 3, and I'd review, this is the growth rates for the car classes, and this is what, if everybody made the same exact car, this would be the averages of what I'd sell. So this is a good thing to know. So I go back into redesign the vehicle. I'll put in, and so I remember here from the user guide 34. So I don't think my cars will be better than average, so I'm just going to go put the average in. If I felt that my cars were better than average, I would probably put in higher numbers. And if I felt my cars were less than average, I put in lower numbers. So you really have to tweak this by no means is going to be the correct forecast, but it's just a guide to say this is, you should be in this ballpark. So for a luxury vehicle for round 3, around 3,000 cars. You would sell more if you made a better car, and less if you made a car that wasn't as attractive compared to your competitors. Okay. Now also I'm looking at 55, 48, 47, 47. So if I go to my overview, I see I left off with a profit margin of 50%. I actually went down from year 1 to year 2. So if I go back to my sales, I see that some of these cars are not, 3 of the 4 cars are not beating those expectations. So I'm going to have to lower some of my variables to get above the 50% I had last time. Okay, so now my percentages are higher this round. And that's important because investors always want to see that you're increasing sales and increasing profits, but most specifically, profits and earnings per share they want to see increasing. Okay, now I have new ranges here for the advertising. It's going to take a while to fill this in because I have to, again, go to the student user guide and look at the advertising area and see what's most effective for each vehicle. And that takes a while, so I'm just going to pause this and then fill it out and then move on to production. Okay, so I'm in production, and I see that I need to buy a couple more production, 4 more production plants, 1 per car, so I can build the new, up to my new forecasts. And my capacity utilization is good on economy. I'm 100% using all my fat capacity. This is my capacity, but for some of the 3 other models, I'm not at a full 100% capacity, so that could hurt my total asset turnover. So here with the operational investments, I'm trying to double them every round because I get 100 points for doubling them. And So I'm going from level 2 to level 4. So I started round 1 at level 1, and I went to round 2 at level 2, and now I'm going to round 3 at level 4. So I can maximize my points on operational investments, but also help to reduce my costs so I can maintain my profit levels. And I have some extra money, so I'm going to pay down some debts and buy back some stock. Okay, so I have a surplus of 12 million. Let's hope that's enough. And you can sometimes get a deficit. You see a surplus in the pro forma. And remember from accounting class and also your finance class, a pro forma is a guess of what your profit should be. So my pro forma said I should have about 7 million or 12 million in surplus, but I only have 1 million in surplus. So how is that possible? Well, pro formas are estimates and guesses based on your sales forecast. So this must mean I didn't sell every car I forecasted. And sure enough, I have leftover inventory. These weren't sold. I didn't make any profits on them. And hence the reduction in overall profits turning into cash, which led to a much smaller surplus than I had expected. But I was able to increase my profit margins for a gross operational and net. And that trickles down into a lot of these per share and these return on assets and return on equity and total asset turnovers. So I made points in most categories, and I made points in my debt ratios because I bought back some debt. And my forecasting wasn't as accurate because I was trying to be closer to what I would actually sell, the demand. And that's, this is, I'd say, pretty good. So even though I lost some points here, I'm not upset about it because I picked up 45% increase in sales, which is amazing. So I got my 528 points, and now I'm in round 4. So again, I repeat the process in round 4. I check out my assessments, look at the advice they have, check out the charts, look at my industry and my competitors, and then go back to sales. I may quickly review the student user guide to see what year 4 sales look like. And we got like 4, 5, 4, 6, 3, 4. I think I'll go with that. So I think I'll go with 4. All right, 4 and about. So I think I don't think my cars are that good. So I'm going to go below the forecast because I don't think I'm really building cars. But I see my cost reductions have increased, which is going to help me to maintain my profit levels because I always have to keep beating them. So I left off at overview 55%. So this round, this is not cutting it. So I'm going to have to actually, here we go. 60 is a good. So reduce the ones to lower impact first. And 60, I guess I'm going to try to shoot for 60 this round or better. Because I want to always be beating my profit margins. Just like every company that's public on earth is always beating their profit margins. And that's how they keep investors happy, and that's how they maximize shareholders' wealth. Okay, so I'm trying to get to the 60% or better. Okay, good. And this is, and you bet I'm telling you, this is what executives do when they look at their company and they think to themselves, I have to get profit margins up. I have to get, so what they'll do is for a lot of cases, they'll go in and, say it's a fast food restaurant. They have to get their profits up. They raise their prices. So that's why for a lot of public companies that are restaurants like Panera, Cheesecake Factory, McDonald's, Shake Shack, Chipotle, they'll continuously raise their prices 2 or 3% every year, or even every quarter, to get that increase in profits. So even though sales aren't growing as far as the amount of people coming to the store and buying food, maybe it's the same or flat, but they're raising prices to make sure that they're keeping their investors happy. And that's, why a company like, if you've ever been to In-N-Out Burger, why they're so inexpensive is because they're a private company. They don't have to please shareholders every quarter. But this is the name of the game. This is what happens in the real world. companies are expecting more and more profits. Okay, so my goal is about, so I think as close as I'll come on the truck here. I don't want to go too far below customer expectations, so I'll just have to leave it at 59% as my best. And then economy, my luxury rather, is one of the easier cars to do well on. Okay, 59. I want to try to get it to 60. Good, 61%. Okay, so I'm getting that 5%, an average of 5% increase in my sales, which was what I want. Okay, so I finished the marketing. I noticed that marketing costs went up a lot between round 3 and 4. Round 3, marketing costs are about 2.5, 3 million. Now they're up to like 8 million or more. So marketing is expanding along with the expansion of the size of the industry and the competitiveness of the players. So I have to sell more cars to make sure that I can afford the extra marketing costs. Okay, so this, I have capacity. I have to buy one plant here. I'm good here, and I have to buy one plant here. Okay, so I'm only buying 2 rather than 4 plants. That's going to help my total asset turnover and return on assets, because I'm not really buying as many assets this round as I did last round. Okay, and again, to get those, I want 100 points in operational investments. I'm going to be doubling my operational investments, or 100% increase, to get those 100%, 100 points. All right. So I'm moving into the finance page for round 4. And once I'm done with this, I'll be in line. I'll be caught up with the class. I see I have a surplus of 29 million. So let me pay down. Again, I'm going to pay down some debt. And this will help my debt scores, and I'll buy back some stock. Okay, so let me process round. Okay, so I'm in round 5, and I did get my debt ratio. Let's see, my revenues increased by 36%. My quick ratio, and I improved my quick ratio and debt ratio, so I got points there. My profit margins went up, so I got points for my gross operational net, and that helps me to get points in other areas. But I see that my earnings per share went up, but my return on assets and total asset turnover, return on equity were a little bit lower, because I guess I accelerated the company, but I didn't do good percentage-wise in generating my earnings as I did last round. So just a few points down there. But I did make kind of flat on my forecast. I made money on my book value and market capitalization, and I doubled my investments, so I got 100 points there, and my surplus came in, so 454 points. So that's good. Let's see how I did if I go to, if I look at the industry, if I look at myself in the industry. So now I'm entering round 5 like you guys, and I'm at 2,200 points. So trying to keep it around those 400 points or better each round. And of course the first round, there was a lot of points that are easy to be made. So I have 2 more rounds to go, and I'm at 2,200 points. So that's how I would have completed round 3 and 4. And I would use a similar process to do 5 and 6, which is what you guys have to do next week. So if we look at, let's review how the class did for rounds 3 and 4, and we see that for net profits, companies did increase the net profits between round 2 and 3, and companies overall did increase net profits between 3 and 4. And we have some companies here. If we look at these companies, Let's Get Crazy has 165 million in profits. The Wheel MPV has 128 million. The I'm not sure how to pronounce that, but 127 million. Crash and Burn 130 million, and Cruise and Buy 132 million. So we have a number of stocks over 120 million. Number of companies over 120 million in net profits, which is fantastic. And we only had a few companies that reduced. So we had one company here that reduced their net profits. That's a problem. So that should be really looked into. And most companies have increased. So in a growing market, growing 20, 30%, with the ability to reduce your costs and increase your prices, your profits shouldn't go down. Now here's the 400 level of points. We're trying to kind of get around 400 each round, and most teams for round 3 did that. Round 4 is the toughest round, so we have only a few teams really surpassing the 400 points. So round 4 is typically the toughest round to earn points in. Round 5 and 6 are easier because you made a lot of your investments already and your cost reduction, so you should be able to reap the benefits of those investments in rounds 5 and 6. Usually points go up again. So it usually kind of lulls down to 4, then back up in 5 and 6. In stock price, we have the same leader in stock price, and we have the same second place team in stock price, and the same third place team. Well, these two teams are kind of tied, very close. We have the same fourth place, and then we have, so this is the pack of students here between 54 and 71, and we have two teams trailing down here, Let It Go and MPH Auto. They're trailing in the stock price, and their stock price is trailing because they may have too many shares outstanding, or their profits are just too low, earnings per share is too low, not exciting investors. When we look at sales, we have this is the top sales is 668 million is the top sales, all the way down to 425 million. So the $200 million in sales is a big gap, a big distance. So even here we have 554 million. This is $120 million in sales. So there's a big range of what you can achieve in sales. So different strategies are working better for different teams. Just remember, whatever your strategy is, that you remember to make sure you're maximizing profits with your strategy. So it's okay to come in here, say in these like positions, as long as your profits are, Cruising By is one of our top companies. So as long as your profits are making the most of your sales, you can still do very well in the simulation without having number one in sales. Earnings per share, we have a new leader in earnings per share, crash and burn, and first place is now second place, and we have a new third place, Let's Get Crazy, and then continuing of Cruising By, and it's hard to get this yellow one here. The Real MPV. These are our leaders in earnings per share. They're also our leaders in points and in profits. This is where the majority of the class is doing. We only had one team, like we said before, actually two teams here reduced their earnings. And this team is moving steady. They just really have to kick it into high gear to get up with the pack. You want to be somewhere around here at least with your earnings per share. Okay. So if we look at the leaderboard, we see that the current round points, like I said, a lot of teams are, in the 300-400 level. In the gross profits, we have one team at the 61%. By round, we're going to round 5. In round 5, everybody should have gross profit margins at least in the high 50%. And most teams that, if they want to be, doing very well, should be getting into the 60% range in round 5, and then the 70% range in round 6 of gross profit margins to be in this 90 percentile. So these teams, every team here below 50%, you need to kick up your profit margins into the 50 percentiles for next round. Try to go up at least 5-10 points of gross profit percentages. And we talked about stock price on the charts, return equity, and we have a couple teams in 90 percentile returning 36 and 35% returns on the money invested in the company. And total points. So we have 1, 2, 3, 4, 5, 6, 7 teams at the 2,000 point level, which means they just have to make this is a good question. What is the total points for them? Okay, so you want to make over 2,500 points. So these teams have to make less than 250 points a round for the next 2 rounds to get to the top score of the simulation. Certainly any team that's above 1,500 points can still make it. They just have to do 500 points each round. Very doable for the last 2 rounds. If you're behind here with 1,100 or less, that's going to be a real challenge to get 1,500 points before the last round. Possible, but it's going to take a lot of work. Operating profit margins we talked about. And you see there's a big range from 14% to 36%. You definitely want to be above the 30% range in operational profit margins. And one way to make sure that happens is increase your gross profit margins. That increases your operational. And make sure you're not overspending in advertising area. Earnings per share we talked out, return on assets. As you bulk up, and that's one of the things you really kind of bulk up on assets in round 4 when you're buying extra production plants and operational investments, so it does hurt your return on assets. But this will come back in round 5 and 6 as your asset purchasing is going to be small compared to the growth of sales and profits of your company. And the same thing with total asset turnover, because your sales are growing at 30%. So now you're growing, you have 500 million in sales, 30% is a lot more sales on that base than when you were 100 million in sales. So revenue per share should grow easily, and so should total asset turnover. Okay, so that is my 20-minute review and suggestions on moving forward from round 3 and 4, moving forward into 5 and 6. So keep up the good work. I'm hoping you're enjoying the competition of this, and I'm hoping that you're really getting an understanding of how public companies, the strategies that they have to employ to compete and be successful in the real world. And I hope we're breaking that stereotype that companies like to portray this idea that they do what's best for the customer. So they lower prices when they can lower prices, and they simultaneously improve quality and lower the price to consumer on all their products. That's what they want you to believe, but in reality what companies are doing are they're trying to reduce their costs and increase their prices at the same time to maximize profits. And you can look at a company like Apple has been in the crosshairs lately because they made an update which significantly reduced the performance of their older phones, and many of us feel that they did that so they're forcing us to buy their newer phones to increase their sales and profits. They claim it's to protect the battery of the phone, but I don't buy it. So anyway, good luck in the next 2 rounds next week. I wish you the best scores possible. Thanks, and take care.